Good afternoon, everybody. Welcome to the last show of November, November 30th. Holy banana bread. It's here. It's here. I'm loving it. We're heading into, of course, one of my favorite months of the year. We're heading into December. Will we have a possible Santa Claus rally? We're going to talk a little bit about that today. But before we go any further, folks, there's a little thing going on next Saturday. I don't know if you guys saw on the community tab. I posted the poster and a link if you want to register. So this is something going on. 9 Points doing it. It's basically, in a nutshell, it's kind of like it's called an investor call, but it's really not. It's basically you register. There's a link when you add it to your calendar. You get a link. You just head on over there. And you can watch them talking about a whole bunch of different issues for do-it-yourself investors. In fact, well, actually, you know what, guys? Let's pull up and talk a little bit about this is what they're doing. So the key things they're going to look at is they're going to take a look at some of the macro themes that are shaping 2026. So what's this next year? What's it got in store for us? I'll be covering this anyway, guys. But I'm looking forward to seeing 9 Points view on this. I have signed up. I am registered. It's in my calendar for next week. They're also going to talk a little bit about how covered calls really work and some of the common myths. You know, most of us know this stuff, but I can't wait to see their viewpoint on this. And this is a good one. How to evaluate risk and leverage. So that's going to be, I think, a really key thing. And with a lot of ETFs starting to bring in the leverage, I think that's a perfect time for this. There's also a Q&A that will be at the end. So if you have questions already, well, when you register, there's a place you can actually enter in your questions. So that way they can hopefully get to it, depending on how busy this gets. But anyway, I'm going to be checking this out. Some of you guys want to. I actually added a thing here. Here we go. Let's type in learn my new code. Of course, I'm not going to get much use out of it because, well, it's only a 1 day event. Actually, it's only a 1 hour event. But there's the link as well. If you guys want to check that out, I think it's going to be a lot of fun. I'll be there. I'll be listening. So hopefully, if it's really interesting, we'll talk about it next Sunday for sure. All right. Whew. Now, we got other stuff. The Financial Express. What the banana bread is that? So that is our December event. So in a nutshell, today the train is leaving. It's leaving the station, and every market close day is a potential station. Of course, we've already got the Wednesdays. The Wednesdays are staying, no problem there. But there'll be an opportunity to add some stops along the way. And in fact, Friday's crew, they added the Monday stop already. So tomorrow there will be a market close tomorrow, and tomorrow there will be an opportunity to add another stop, the Tuesday stop. And how that works is it's kind of like the typical thing. So if we get in the course of the show 4 supers or 4 gifted, any combination of the two, we add a stop. Simple as that. So Lord Fubar, actually on Friday, guys, and some of you may know because you may have got email saying you've been gifted a Mountain Finance membership. Lord Fubar donated 10 Mountain Finance memberships. So Lord Fubar basically powered the Monday station all by himself. Fantastic. So that's what we're going to be doing through December, and we can potentially, I worked it out on the calendar, we can potentially add 16 live streams. So that's kind of cool. Now, I do want to create, and I haven't yet figured it out yet, guys. I'll tell you right now, I haven't figured it out, but I want to create if we hit a certain number of those through the month, because we're probably not going to hit them all. Who knows? We may only hit 1 or 2. I don't know. We'll see as we go. But if if we hit a certain number of them, I'm thinking maybe if we get 10 of the 16, there'll be some kind of another reward that I have to think about. I got to think about what can I do? What can I do if we hit 10 of the 16? We'll figure it out. All right. That's the Financial Express. I still got, there's still some other stuff coming up as well. So the next video on Tuesday, that one, normally yesterday's video, or sorry, Friday's video, normally Friday's video should have been the channel members video, but November got away from me. It totally got away from me. It's like, I realized after it was too late that that was supposed to be the case. So it got pushed ahead a week. So I have, I've taken back your guys' ideas to the channel members. They voted. We got one, and I've got it scripted. And oh boy, it could be a long one, guys. It could be a long one. But we'll see once I get to the filming and editing. That'll be happening tomorrow. And the channel members will be able to watch that tomorrow afternoon. Okay, with that being said, I have also got coming up. I don't know if it's going to be on Friday. I got to see how this works out. But I've got a couple guys from 9 Point. We're going to talk a little bit about one of their funds. I think it's going to be a fantastic interview. I can't wait. I can't wait. I'll actually be doing that interview on Tuesday, and then we'll see how. I may not be able to get it out until like the following Tuesday, but we'll see. We'll see. We'll figure it all out as we move along. All right. Whew. Well, guys, let's. You know what? I've talked enough. Well, I'm not going to stop talking, but I've talked enough about housekeeping. Let's hit up the chat. Let's see what you guys got going on here. And Prairie is in the house first with a good afternoon, Candace and community. Happy Sunday. Bismarcky in the house with a happy Sunday, everybody. And Paul is in with a happy Sunday. Everybody's having happy Sundays. That's fantastic. Here's my guys, is your tree up? If you celebrate the holidays, has your tree gone up yet, or is it still something to come? Kind of curious about that. All right, Claude says hello. I can't deny it's winter anymore with all this snow. Yeah. Well, most of Canada right now is experiencing at least some degree of that polar vortex. That's basically big cold air mass over the Arctic. The jet stream over Canada, if it weakens a little bit, that Arctic air mass, that polar vortex comes down and gives us a chill. So, yeah, it's been snowing here most of the day. I think it's still snowing. Yeah, so, what can I say? King of Day is in the house with a hello, all happy Sunday. Well, hello, King of Day. Hope your day is going well. Larry's in the house. Let's see. Market's acting just as expected. Let's see that 100K Bitcoin challenge and rejection next. Yeah. And that's kind of where Larry's kind of predicted. Larry believes that Bitcoin is going to make it back to 100, but get rejected at 100. And that is a possibility because 100 is one of the key, it was a key support level. Now it's a key resistance level. And it's also a psychological level too. So that's kind of one of the things with Bitcoin too. Sometimes when Bitcoin's going up and it hits a psychological number, so a psychological number is one that's just easy for people to grasp in their head, people take profits. If somebody bought it at 90K and it goes up to 100K, it's like, oh, I think I'm going to take my profits. It happens. It happens quite a bit. We've got Vic in the house with an afternoon, y'all, and crypto winner. Not officially yet. It's it's definitely crypto volatility. Is this the prelude to crypto winner? That's going to be a good question, and right now I don't think we can answer it. I really don't think we can. All right, a Scratch is in the house. Hello, everyone. Let's all have a thumbs up for Candace's Sunday show. Yeah, absolutely, guys. I hit that like button, and speaking of the like button, oh boy, we got Mary in the house, and Mary is our official captain of the like button. So You don't want Mary coming out later in the show saying something along the lines of, there's 60 people watching, but only 30 likes. What's going on? You don't want that. Let's just get ahead of the game, and we'll just hit it up nice and early. All right. Oh gosh, not so good. It's got a hint of gingerbread today. Hint of gingerbread in the coffee. Bismarcky says, no tree up yet. It's not December 24th. Really? I don't know. It's like, to me, that seems like you're cutting it really, really short. But, I guess some people, maybe they don't do it until later in December. Apparently, Bismarcky does the tree on December 24th. Why not? Why not? All right. We got Brian in the house with a good afternoon, everyone. And here is Lisa making an appearance. A happy Sunday, everybody. Pretty miserable day outside, so indoors making a pot of chicken soup. Oh, there we go. Good old chicken soup. Gotta love it. Are you putting noodles in it, though, Lisa? You gotta put noodles in your chicken soup. Paul says 6 degrees Celsius in the BC Lower Mainland. All right, Paul. Everybody else in the chat right now is looking at you and going, ah. So, oh well. Anne says, just putting the tree up tonight. We donate to less fortunate in exchange for a nice East Coast fur every year. Nice, absolutely. Yeah, I mean, one of my favorite charities, guys. It's actually a maritime charity. It's called the Christmas Daddies. They have a telethon every year. Basically, it's a way to give presents to a bunch of children who perhaps come from families that are not well off. So I always appreciated the Christmas Daddy show. So even as somebody who's no longer in the Maritimes, I'll still probably catch some of it on the inner. Well, I'll catch part of it because I also got, and you guys know we already talked about that 9-point investor call. I want to check that. I'm really curious about that. All right. Patricia is in the house with a hi. Prairie says we're picking up our tree next weekend. All right. That makes me think it's our live tree. Here's another question. Live or artificial? Which one? What's your preference? I mean, I know I've always had a live tree as a kid. Well, not a live one, but one that was alive. But probably since about 20, it's been artificial all the way at that point. I think I just hear too many horror stories of trees catching fire. Roku says, happy snowy Sunday. Yes, the tree was magically put up last week by someone other than me. That's the best way to do it. This one place I used to work at, this was a call center. The managers were sitting around one day, like late November, and somebody was like, they were waiting for somebody to mention that the tree wasn't up, and so I mentioned the tree wasn't up. And of course, because I mentioned the tree wasn't up, by the end of that meeting, I somehow was assigned to put the tree up. It became my responsibility. And then, of course, once the holidays were over, because I put the tree up, they argued that I probably should be the one to take it down. Oh, boy. All right. Larry says, a DJT doing well down to $10, bought up 2x of DJTU up 290 to 345, sorry, to 355, expected to $7-10. That one scares me. I will just say this, Larry, you are braver than me when it comes to DJT. Monthly Mint says, what's your thoughts on XRP? Looks like a great long-term hold as banks are changing. Also looking forward to when Evolve ETF launch XRP ETF with leverage and covered calls. All right. Well, first of all, XRP. I do like XRP. For me, it's one of the safer crypto, because if you ever watch the market close, I usually make fun of an altcoin, and I then usually come back and I name off some of the cryptos that I think are pretty safe, and XRP is obviously in that list. And yes, that connection to the banks certainly is good for XRP. Is it a great long-term hold? Absolutely. I got no complaints over XRP at all. And yeah, I would love, I would love to see a covered call, even covered call with leverage XRP ETF. That would be fantastic. Michelle says, hello from sunny Vancouver. Sunny. No. Here, we haven't seen the sun. I can't remember the last time we saw the sun. It's been a while. It's been a while. Claude, is this really Brian in the chat or is it David? That's a good question. His name is Brian. For some reason, David keeps popping into my head though. But I quickly push it away, except for occasionally. Occasionally, I call Brian David, which is why I really think he should change his middle name to David, so that way it's not a problem. But it's okay, Brian. Yes, I will put noodles in. All right, fantastic. And yeah, Patricia says it's snowing today in Montreal. And yeah, exactly. I mean, normally, whatever weather we have here in Ottawa, Montreal usually gets it like not even about an hour later. No, maybe sometimes not even longer. But yeah, absolutely. DHIT, big banks report money this week. Come on, baby. Sorry, come on, bank. For some reason, bank looks like baby. Come on, bank, and VDY. So yeah, we've got some earnings coming. I think they're going to be good. I think we're going to see some pretty solid earnings this coming week, and we'll have a chance. We'll have more of a chance to look at some of these things as as shows get added during the week. Scratch says, anyone as excited as I am for the silver futures this week? Silver's been doing really, really well. So, yeah, I think you've got a right to be excited. I think you do as well. And Brian says, yes, it's Brian. I am a twin, but my sister would never be mistaken for a David. Okay, there we go. Oh, the life of Brian. Afternoon. Oh, I love that. That's funny. Good Monty Python reference. I wonder if I can change my assigned ID in YouTube. That's a good. You probably can. I think you can. I think you can. Just ask ChatGPT for a step-to-step on doing it. But you can definitely do that. I don't know how to do that. Yeah, the only reason I know is that this channel, when I first launched this channel, it was called Financial Brew. That didn't last long because it didn't take long for me to realize it was a dumb name. So, well, I don't want to call it a dumb name. Just that that Mountain Finance was a much better, much stronger name. And I changed it. So it went so that, the at Mountain the at Financial Brew became at Mountain Finance. So it did change. It did change. So you could do it. I know you can do it. Every time I see DJT, I always say, why is it not a penny stock? Well, I imagine after his term is finished, it'll probably become a penny stock. Will banks increase divs this earnings quarter? That's a good question. That's a good question. When did they do it last? I think last time around, I don't think I think one. For some reason, I think last earnings, one of them changed. So maybe, but I don't know 100%. We'll find out though as it happens. All right, and very quickly, I'm going to jump ahead here because guys, we got ourselves a super, and thank you, Mary, of course, and that means we got a goat. We got a goat in our corral. I love it. I love it. Thank you very, very much. All right, now Claude says, I may be late at the party, but I saw that MSTE might be delisted mid-January. Don't know what to do with my small allocation. That is one of the dangers. When you're looking at something like MSTE, I mean, if a value or a price falls below some of the thresholds, and different exchanges have different criteria for being on that exchange. So what does that mean for something like MSTE? Well, one of the options that they can do is they can do a reverse split. that could be an option to sort of try to prevent it from happening. But yeah, this is going to be very interesting to see how this all rolls out. As you guys know, I'm not a huge fan of MSTE, but I don't mind getting exposure to it, of course, within HHIS. But I just, yeah, it could be very interesting. I don't know what the threshold is. MSTE, is it? I think is it on Neo? I can't. I'm not sure exactly which exchange it's on. But that could be very interesting. Prairie, it's been a tradition to cut down a tree at a local tree farm since the kids were young. Had a real tree up until I was a teen, and then had an artificial after. I can go either way, but love the real ones. Yeah, yeah. I mean, I love the real ones too, but sometimes it's nice if you do have an artificial tree, like you might be able to get, 4 or 5, maybe more years out of it. So that's kind of one of the nice things. All right, a Dakota. Been a long time subscriber. I just stay quiet, but really like the videos. Keep it up. Glad the channel is growing. Well, thank you. Thank you. Yes, I've got a good amount of lurkers. I have a good amount of lurkers. Every so often, a lurker does step up, and I appreciate it, such as right now. Yeah, absolutely. And that's the thing, guys. Like, if you're a lurker, and this is for the lurkers out there, you are appreciated. You may not speak up, you may not ask questions, but just know that I do appreciate the lurkers. Because yeah, when I look at a stream, so let's say, and we're just looking during the live stream. So if I've got, 60 people in here right now, well, how many people are actually talking? What is it? Maybe 10, 15? So that's another big bunch of people who are just lurking. And that's fine. And that, like I said, that's perfectly fine. I appreciate, of course, I also appreciate everybody talking because it makes my job easier. If we had, like, let's say we had 60, well, right now we have, I think currently we have 64 people watching. So if we had 64 people watching, but nobody was asking questions, oh my God, the tangents would be awful. We'd be talking about childhood memories. I mean, this is something I did at the beach when I was 5. Yeah, that's where we would probably go. Monthly Mint says, keep up the great work, Mountain Finance. Let's see your channel reach 100,000 subscribers. Well, I'll tell you, I'm going to be happy. I'll be happy right now with 10,000 because that's the first big milestone, and we're going to do something for that. Here's the thing. I don't know when we're going to hit that, but there is the potential to do it by the end of the month. And I sure would love to do it by the end of the month, because that would just make December even more busy, I think right now, and I did the math. I think I need about 25 subs a day for the rest of this month, and we'll hit it by New Year's. So that's doable. That is actually doable. So we're going to see how that rolls out. I think right now we're sitting at about 92, 22. I think. Actually, let me take a look. I hate guessing if I've got access to the information. 9223. There we go. So yeah, it's definitely doable. And then 100,000. Well, that's a little ways down the road, but can't lie and say I don't want it, because I do want it. We'll get there. It's a long road. We probably won't hit 100,000 in 2026 though, guys. In case you're really hoping, it's probably not going to happen that fast. But I will say, every 1,000 that the channel has gotten since the beginning, each 1,000 comes a little bit faster than the previous 1,000. So that has, now there has been, I think there was 1 month where I was only 1 day faster, but most months are significantly faster. So, you never know. I imagine, 100,000 by 2030 might be realistic. Or maybe you'll, it's funny, if I have a video that absolutely explodes, that could change everything. So who knows? But here's the thing. Whether or not the channel explodes, whether we just keep this nice steady momentum, it makes no difference to me, because we're going to do the exact same thing. You know, the only difference is that, you know, maybe I'll have a budget. Maybe I'll have a budget. Right now I have no budget. All right. Larry says DJT has a little over Billy in BTC, but I see it as a cult stock. Okay, yeah, fair enough. Morley says, hi all. Whoops, got busy and just about missed signing in. Oh no, it happens. It happens. But you know what? Because even now, when you look at, you know, like let's say we have 100 people watching the video today. Actually, we normally probably get about, we probably get about 300 people through the course of the stream. But by the time all of, you know, everybody's watched all the replay, I mean, you know, well, a lot of people, more people watch it on the replay than are here live. And that's fine. That's kind of it's kind of the way it goes. All right. Larry says, it's just like I played GameStop this week, 2014 into 2257. Nice. Cowboys in the house with the greetings all. Let's see. I don't think MSTE will be delisted. Harvest just announced they will be increasing the NAV for January 2026 to about $10. Okay, yeah, there we go. So it looks like Harvest has already got something up their sleeve to make things a little bit better. So I don't know exactly what they're doing, but it'd be interesting to take a look for sure. Aurori, I have an order for HND for a long position, dangerous sure, but it's cheap and could run up $1. Okay, fair enough. And Rory has quite the risk profile compared to most of us. Brian says banks should be raising their dividends this earnings call. That 3 that I looked at all change every 4 quarters. They have paid the same for 4 straight already. That's what I needed to see, Brian. That's what I needed to see. I was thinking it, but like I said, I wasn't 100% sure, so I didn't want to say it. But yeah, you are more than likely right on this one. Kat says, HHIS was good before they out the more volatile stocks in it. They should have left it alone. Hopefully they will remove the ones that are an issue before it drags down a good covered call ETF. All right. So yeah, so we'll have to sort of see how that is going to look. I will say this: their management team is really good. If the changes that they've made are causing issues, they'll make more changes. They'll get it under control. Like I still have a lot of faith in HHIS, but I could see them making some more changes for sure. Absolutely. We got a hey from Wahippo. Lord Fubar, and guys, we mentioned Lord Fubar earlier. Lord Fubar is single-handedly got the Monday show for you guys. So all hail the Lord Fubar. Claude says, indeed, only BNS is not clear if they'll raise dividends, but the 5 others should. Okay. Vineet says, hey all, JJ, what is JJ even? I don't know if JJ's here, Vineet, but hello, how are you? Prairie says, I have my parents' artificial tree. It's now more than 30, holy banana bread, 30 years old. Have put it up a few years when December got away from us. Last time it was up, it started to show its age. Oh, wow. No, well, let's be fair. An artificial tree built 30 years ago is probably built to last compared to like some of the ones I've had recently. Within a couple of years, you're losing a lot of needles. The quality is just not there anymore. Kat says HHIS is really good. I hope they take out the more volatile ones before it drags down a really good cover. Yeah, that was what you mentioned before. Yeah, we'll see. We'll see how it all looks. Now, keep in mind though, a lot of the volatility. So you take, for example, the strategy part. That, you know, the whole fund. So the HHIS, it's designed so that one of them can't really pull it down. But I'll tell you, HHIS, sorry, HSTE certainly has a certainly has a good little downswing for sure, but that will recover eventually for sure. Rory says RY is just too expensive to add on in bulk at the moment to get those increased divs. Yeah, some of the banks are really, really expensive. I would very much like to see some splits, some stock splits. I don't know if any of them are going to do it or not, but well, hey, you know what? Let's take a look at Royal Bank. Let's look at Royal Bank first of all. All right, we'll bring this up here, and we're going to head over here to Royal Bank. So RY. Here we go. Perfect. All right. Now, Royal Bank, as you guys can see, like $154. That is a lot. But let's head over here. All right. Let's see here. And where is, I know it's over here somewhere. It is over here somewhere, or at least it used to be. They've made a lot of changes here recently. Let me see here. Implied float, short ratio. Yeah, here it is, split date. So the last time they did a stock split, it was a 2-to-1. It was all the way back to 2006. So almost 20 years ago. Shy a few months, but yeah, so it's been a very long time. So we know they do them. Well, occasionally, very occasionally, but you know, I would love to see even another 2-to-1. Imagine just cutting that 154 in half. That's what, 77 and 4.5 cents, something like that. So yeah, I'd love to see that. All right, let's see here. LOL. Okay, end of the year. Not yet. It's the end of the month. We got another month to go. Heather is in the house with a good day, Candace. Hello, Heather. Hope you're having a wonderful day. Just don't forget us little people, little people when you hit 100K. Nah, you know, guys, if I hit 100K, it's not me hitting 100K. It's you guys lifting me up to 100K. It's, you know, you don't get there on your own. You don't get there on your own. All right, I'm gonna pull this up because what are you talking about? 9223? Is this like your new version of 6.7? But I don't know. I don't know what 9223 means. That's fine though. That's fine. Brian says most of my bank stocks are up 50 to plus 100%. The dividends are attractive for yield on cost, but not at the prices now. They have excellent growth though. Yeah, absolutely. I mean, the banks, if you're looking at just the bank stocks, they're ideal stocks for a dividend growth investor, for sure, absolutely. Rory says I bought CIBC at $50, so it's a great return. Nice. And we'll pull back up. We'll pull back up here. If we don't need the background, if we don't need Yahoo, we can jump over here. Let's see. Prairie says, I've been wanting to take a position in CNQ before it goes ex-div on December 12th, but it keeps going up. Thoughts if I should just jump in? Even though it's still going up right now, I still think it's at a pretty good price. I think energy is going to have a pretty good year in 2026. That's going to help companies like CNQ for sure. So, you know, you can wait and hope something happens, but I would say maybe even just dollar cost average a little bit, you know, put at least, you know, if you're going to get in, maybe go in a little bit for now, then hold off and see if you get a better place that you can average down. But yeah, I mean, I think anywhere you get in at this point right now on CNQ is probably going to look pretty darn good a year from now, for sure. Rory, let's see, just creep in small. I'm waiting for CNQ to be around 42. There we go. So there's Rory's idea, but it's the same idea in a way. Just, you know, take that small position. All right. Brian says my CIBC average is 59.24. I've added a few times. Scotiabank at 67.22. No, that's not too shabby. All right. Hippo says, I put my Q day on trailing stop loss on Friday morning after it settled in for the day. Just the capital I invested going to keep the profits from gains in it. Yeah. So I'm not sure who your broker is, but I love trailing stop losses. If you have access to a trailing stop loss with your broker, they're fun. They're fun because you can pretty much, if something is soaring, you can throw in a trailing stop loss, and you can basically set how much lower than the price that you want that trailing stop loss. And then as it goes up another 10 cents. Your trailing stop loss goes up another 10 cents. So you can kind of leave it, and you don't have to sort of manually fix your stop loss. I like that. I like that a lot. All right, Lord Fubar says, I have started buying PLTE with Palantir growing 70% a year. How could I hope wrong? Yeah, and then there's an emoji there. A rocket red countdown liftoff. There we go. I wish this one would show me the emojis. Well, as you guys know, I'll be switching to OBS here in December, so maybe that one will actually show me the emojis. We'll see. We'll see. Jan is in the house. Let's see. Hello, everyone. Why is a split good? Just so you can buy them cheaper, or are there other reasons? A lot of times what will happen is if you've got two things you can do. There's a split and then there's a reverse split. So with a split, what they're doing is basically if they had, let's say they had 100 shares, well, all of a sudden they have 200 shares, but at half the price. So technically, at the time of the split, you've gained nothing other than your numbers have changed, but your number of shares have doubled, but your stock price has cut in half. However, when you are looking at a higher price stock and it does a stock split, a lot of times what it does is it will lower that price. So it makes it a little more attractive to investors. And sometimes it makes it more attractive to employee investors as well. So there's a few things that it can happen. It can create, it doesn't have to, but it can create some buying pressure, and that will, of course, push the price up. So if you're that person who's just holding the stock and it splits and you get that extra buying pressure, then you probably made a little bit. And then if it's a stock you want to get out of, then you might be able to get out of it in a profit if that's a situation. Now with a reverse split, that's when it's like if you had, let's say, same company, they have 100 shares. All of a sudden, the next day, they've got 50 shares. So you may have been holding 2 shares. All of a sudden, you're holding 1. But that 1 share is worth twice as much as what it was before. Now, one of the reasons that a company will do that, and we've already mentioned it earlier, if you are on an exchange or you're trying to get on an exchange that has a minimum threshold for your stock value on it, then you may want to do a reverse split to make sure that you meet that criteria. So that's one reason that you might do that. There's others, but that's one of the big ones. All right. Brian says splits are good to make them cheaper, bad just to save delisting. Yeah. I would definitely agree with that. All right. Morley, do you think Hood and RDDT would be good for swinging with new CDRs? It's kind of one of those things. Depending on the market, obviously, yes. I mean, if we had the right environment where you were getting a big pump in, let's take a look at. Actually, no, this probably wouldn't work. I was thinking. I was actually thinking Bitcoin for a second, but no, these are not exchanges. Obviously, Robinhood. Well, Robinhood's is a broker, and Reddit is Reddit. But yeah, you could play them. I think Reddit is probably of the two. I would probably feel safer doing a swing trade on Reddit. But yeah, you could. You could certainly do it if you. I would chart them though. That was a thing. So, well, let's take a look here for a moment here. You know what? I'm going to remember to bring this up. And there we go. All right, maybe not so much. All right, we'll close that and we'll come to this one here. Let's go to Robinhood. See if I got it. Here it is. And this is the CDR right here. All right. And, I guess they haven't been around long enough to really, but yeah, here's the thing. So right now, when I'm looking at this, I'm not seeing a lot of opportunity. I will tell you this right now. Um, I look at this. Yeah, there's volatility here, but for the most part, a lot of it's moving down. I don't know if I would feel safe on this one. Unlike, and I'll show you here. Let's go to Tesla. So this is the Tesla CDR. All right, I'm going to pull up that 1 year. You can see that there is a lot of movement up and down. There's a lot of this. Even no matter where they are on this chart, they tend to move up and down a lot. This is very playable. This is very playable because I've got that clear pattern with Tesla. With Robinhood right now, it's so new that I don't have a good pattern. So it's almost like I'd be going in blind. I don't like to go in blind. I like to go in having a general idea of what that stock is going to do. Sometimes, yeah, like if you had been playing it here, or let's say you've been playing it here and then it came down here, yeah, you would it'd take a while before you'd actually be able to make money. You would take a loss in that one scenario. But for the most part, yeah, I like to have a little bit of predictability, a little bit. I like to be able to chart a channel, and here you can sort of see there's a clear channel. Like look at this. This period here was great. You can see right here a clear channel, almost a rectangle in there that it's moving into. When you get a stock in a channel like that, that is fantastic. And I'll tell you, if I was in this channel and then this happened and it broke up way above the channel, I take my profits and I wait to see another channel develop. And then we did have another channel develop right in here. You can sort of see it right in here. And I actually played a lot of this right here. So I would be careful with both Robinhood and Reddit, just because they're so new. They're so new. You don't have a lot of history. Now, mind you, with that being said, if I was going to play Hood, so let's just try this again. I'm just gonna put in the whole name, Robinhood here. Here I would actually go to this chart. So this is Robinhood's chart, and by going to Robinhood's chart, I can sort of see, because that CDR is going to follow along this similar shape, and as you can see, there's that little shape that we had right in there. And looking at this here, for me, like you look, even this movement here, they've moved up pretty good. This seems to be a little bit of a correction. Will they turn around and move back up again? Maybe. They might. But I would play off of here. Opposed to that CDR, just because it is brand new. And with Reddit, same idea. RDDT. Let's go to the US one. Nope, that's a yield max. Don't want to go to yield max. So here's with Reddit. I would come in here and take a look and see what's going on. Like this, like right here, that looks a little, I could play that a little bit, but I would be very conservative. So for example, when something has lower lows, lower highs, and you can see where it's moving in a downward pattern, I get a lot more conservative in how I play. In other words, the zone, my buy sell zone, it shrinks, because I don't want to get burned. So whereas if this was moving up, I will expand that a little bit. I'll expand that zone a little bit. All right. Wahipple says, I have you to thank for trailing stop losses. I am sure I wouldn't be using one without your show. Okay. Perfect. I'm just glad you have access to one. Claudia. Good morning, Candace. Could you give us newbies that are passive income investors in the TFSA, what are the risks? Can we set it and forget it? All right, good question. This is a good question. When you're looking at passive income, is there a 100% set and forget type fund? There's a couple that are close, but I would honestly, I still think you should always be checking. I think you should always be watching, paying attention to what you have. If you're looking at, I'll give you a couple of examples. Canoe EIT. So that is a It's only, well, right now, because the price of it jumped up, it's knocked the yield down to about 7%. So it's 10 cents a month for each share, but it's pretty reliable. Like, that's one I'd be willing to completely leave unattended for a long period of time because I have a lot of faith in it. But what I will say is, and this is another thing too, when you're looking at whether it be a covered call ETF, well, I think we're probably mostly talking about covered call ETFs at this point. You want to be looking at a couple of things if you're putting it into your TFSA. So let me tell you some funds I would never put into my TFSA. First of all, I've been an advocate of my not liking. Let's just say that. I've never liked Yield Max. I've never liked Yield Max at all. They use a synthetic call strategy. Well, at least that part of Yield Max. I would not put a Yield Max ETF in my TFSA at all. Now, mind you, you should, even if they were doing good, you probably shouldn't, because a high U.S. dividend, because Yield Max is a U.S. company, any company with covered calls or with high dividends coming from the U.S., you're going to get hit with a 15% withholding tax. So those are better in the RSP anyway. But the point I was just making is that if you have a fund that's not moving in the right direction, it's probably not one. Even if you're 100% happy with the fund, it's probably not one for your TFSA, because you want to kind of keep more of your fundamentally sound ones in there, because you don't want to be losing. You don't want to lose any of your space, because that space you don't get back. If your share price or your ETF price drops big time, you do lose that space. Now, you can argue, if you've got an ETF that's dropping 10%, but it's paying you 12%, well, yeah, overall, that is increasing your space a little bit. But is it ideal? No, not really. And it also depends on what time of the market we have, because right now we're still technically in a bear market. Sorry, in a bull market. We're in a bull market. In a bear market, you are going to have stuff fall. So keep that in mind. And we're going to talk a lot about that as we go into the next bear market, which could be as early as 2026. But I'll point out, I thought we were going to have a recession and a bear market this year in 2025. We're not. I thought we were, but we're not. So 2026, yeah, I think it's going to happen. I might be wrong, but I still think it's going to happen. So we'll have to sort of look ahead as that happens. But getting back to whether you can set it and forget it, there's a few that I have a lot of faith in. And, for example, things like HDIV, they've done fantastic. And let's just pull them up here for a second. Here we go, HDIV. So this here is your Hamilton Enhanced Canadian Covered Call ETF. They recently changed their name, but you can see they've been moving up nice and steady. This here, Liberation Day. But they've been doing pretty good. We can go back 3 years and you can get a bigger appreciation for how much they've come up. Because when you look at that 1 year, you see that little tiny bit right there, and it makes it look like, oh, what's going on? But yeah, they've done well. So this is one of those funds that I think I would be very fine with having it in my TFSA. Ones like Bank. Let's pull another one up here. So this here's your Evolve Canadian Banks and Lifeco. Once again, here's another one. I have no qualms. And in the 1 year, you'll see that little bit of a down, but when we go back to the 3 years, you can see things have been moved. Now, I will point out, this part in here where it's been going sideways, that's when the banks did struggle. On the 3 year, the banks did struggle at that beginning. Banks did turn around, and obviously Bank did well. But what's nice is, while the banks were struggling, Bank was still providing you with some good income. So that's not a bad thing at all. But yeah, normally what I would say is, look at what Look at what those ETFs are holding. So here's ones, here, I'll give you a few that I really wouldn't put in my TFSA unattended. Any single stock ETF. Any single stock ETF. And I know there's some of you out there who will argue with me right now, but your single stock ETF I wouldn't put in there. So like MSTE, there's a perfect example. And let's pull this up. And this is the danger of a single stock. You know, there's going to be plenty of them that have done really, really well. But when you look at a stock like this, you know, that you were buying at $15, $16, now it's worth $5. You know, if you bought a lot of that, that's going to hurt. Sure, you got a lot of dividends. You got a lot of dividends for sure. So I would have to actually do the math to find out exactly how much you would be out. So, but you know, this is one I would be a little careful with. I'd be a little careful with. So if you've got well diversification, if you've got solid assets, then you're usually fine. All right. A says, do you know why natural gas keeps on going up? Even in winter during Biden years, it barely budget past $3. I'm not sure what is happening right now with natural gas, but that doesn't mean that there's anything weird going on. It just means I haven't looked. To be very honest, I have not looked to see what is going on currently with natural gas, and I probably should put my focus on it again. I probably should take a look for sure. Chuck says, is it possible for a CDR not to track the underlying? The BMO and CIBC Micron Tech CDRs are not moving in the same direction in my Wealthsimple account. Well, that's odd. That is very odd because just the whole structure of a CDR is that they should be tracking in the same direction. That is really, really, really interesting. I kind of want to see this. I kind of want to see this for myself here. Let's take a look here and see. So the Micron, right? Micron CDR. Let's see. Micron Technology. Here we go. Micron Technology CDR. Let's see. Now, here will be the big question. Which one is which? All right, here we got this one here. And I believe this is the CIBC one. Yeah, right here. So I'm going to pull up the 1 year. So yeah, so CIBC has it moving up. And you're saying that the BMO one has it moving down? That is very, very odd. And I didn't see. Let me just take a look. I'm going to duplicate this tab. Let's see. Micron. Let's just try Micron BMO. Micron Tech CMF. BMO. Okay, here we go. BMO. There's a few different ones in here. This is interesting. I'm not sure exactly which one to click on here, to be honest with you. We'll go with the top one. Page does not exist. Okay. Yeah, I don't have the data on the BMO one, but they should technically. Now, if Micron has multiple share offerings, because sometimes a company might have Class A, they might have Class B. There may be other share offerings underneath that. So that could be if they were both tracking different versions, but even then, those should be moving in the same direction. So this is a great question. I am baffled by it. I am absolutely gobsmacked. Is that a word people use anymore? I don't know, but I'm using it because gobsmacked is probably the best. All right. Larry says, I hate buying expensive stocks. I only look for low-priced things or stuff people now hate. All right. Fair enough. Fair enough. And you know what? I mean, when you buy a high-priced stock, you know, there's only so much more room for it to grow upwards. So sometimes those cheaper stocks, they can be a better way to go. All right. Which broker is best for option trading? Notice that Wealthsimple does not allow options for Canadian stocks. Good question. I don't do options. So I do all of the options that I get. It's all through covered calls. So I don't actually do options myself. So I'm going to throw this question out to the audience. I know we got a few people in here who do options. Maybe we can get some feedback for Chuck. All right, Claude answering to Larry. All right, Wahipple. On Road Hood, is that dip at the end? Is that the tax harvesting dip? Oh, on I think you're talking Robinhood, right? On Robinhood. It's hard to say what it is. Is a component of it tax loss harvesting? More than likely, sure. There's going to be some amount of tax loss harvesting going on from about the middle of November up until, could be even a couple days past Christmas of people who are the last minutes getting in. So, yes, it might be a little bit, but I would hazard to say that it's all tax loss harvesting. Could you show how to use a stop loss in national bank brokerage? Yeah, I probably could. Let me see here. Just give me a moment here. I need to. All right. Here, just give me 1 second here. I need to pull this up. I'm gonna go big screen here for a second because I don't want I don't want any of the personal stuff on there going out. Just give me a sec. I also have to log in too. NBDB. Here we go. Sign in. All right. All right, here we go. All right, let's see here. Okay. All right, there we go. I got it where we want. I got it where we want here. So I'm gonna pull this back up. All right, so this here is this is a sell. So you got a sell here right now. This here is Extendicare. So if I was going to send Extendicare at a stop loss, what I would do is right now is first of all, I'm going to look. You see this here bid ask right here? And this is very, very important. So right now, and mind you, there's a big spread on this right now because everything's closed. That does happen. Normally these are very, very close. But with the bid ask, first of all, if you buy it, you're paying that 2062. If you sell it, right now you're paying 2046. So with a stop loss, I will come down here and you'll see here we got price type. So right now this is a sell order. I will just change it from market to stop loss. So it will then ask me for a trigger price. So in this case here, my stop loss, let's say that this is rising. I might put this in at, let's say I put it in at 2030. So at 2030, now I will point out one thing here, John. It does not use the bid ask for this. It uses this price up here. So the actual share price, and you'll notice it can be different than these. So sometimes you got to just be aware of that. So for that reason, I also will put in a limit price. So what that means is, let's say I put in a limit price of 2020, like that. That means is when it gets down to 2030, it will start, it'll create an order. It'll create an order, and that order will be active until it gets down to 2020. At 2020, it will cancel that order because it will only sell in that range between 2030 and 2020. So with this, I would click submit. I don't want to create one right now, but I would click submit. So with this, if, for example, this price was going up, I might just open it up again and I might just change these numbers. So if it, let's say it went up another 10 cents, I might come in and drop this up to 40, drop this up to 30, and then save it. A trailing stop loss would do that automatically for you. But yeah, that's how you do it. That's how you do it. All right, now let's get back over here. All right. Larry says, if I missed a player opportunity, I just move on to the next one. Exactly. Exactly. All right. Hopefully this works for my ID. Oh, it does. It does. Look at this, Brian. You are now Brian. I'm not going to call you David anymore. I love it. You can change your YouTube handle by going to the YouTube studio, selecting customization, then basic info, and clicking publish. There we go. Brian is singing I'm Not David. MSTE, I knew it, says Skiz. Welcome back, Skiz. All right. Our economy is like the Truman Show, trying hard to cover it up. Michael says, hello, Candace. Any thoughts as to why Timber Creek is still doing poorly? Good old Timber Creek Financial. Let's head over there. I did get out of that. No, I didn't get out of it because I had lost confidence in them. I got out of it because I wanted to roll it all into RMAX. So it's kind of an interesting story. I think we got a few things going on right now. First of all, so here's Timber Creek Financial. I'm going to go to the 3-year just to pull it up. When you look from this perspective, you can kind of see it's a pattern with them. They normally go up, down, up, down. It normally does happen. So I'm not too concerned about them. Like, I still think they're pretty stable. I think their dividend is pretty safe. However, I'm going to pull out 5 years. You can see at one point, we've never gotten back to some of the pre-price. And I'm going to even go 10 years and sort of show you that this here, for the longest time, this was kind of their area. And we've kind of found a new area lately. So what's going on? They responded really badly to the aggressive rate hiking that we had at one point when the Bank of Canada was, of course, waging their war on inflation. They've never truly recovered from that. Now, utilities and REITs normally respond really, really well to rate cuts. Not this time. So what's going on? What's going on? I've got one hypothesis. One hypothesis is that the reason they respond well, now utilities are responding well. Let's just say that the utilities are definitely responding well. They're stable. They're great. People like them. The problem, I think, right now with REITs is that they're not as an attractive payer as they used to be because there's so many other options. There's new covered call ETFs coming out weekly. There's lots of them that are being highly successful. And I think that is part of that leg that we've been seeing on REITs. There's some other factors in there as well. Some of the immigration changes that were made have hurt REITs a little bit as well. So we're going to have to keep watching. I still like REITs. I still love my RMAX. I have no intention of getting out of RMAX, but something like this, like Timber Creek Financial, and they're not even a REIT. They're an MIC, which is a mortgage investment company. So will they come back? Yes. If you're looking for an entry point, is this a great entry point? Oh gosh, yes it is. But I can see there are better options. I will just say that there are better options. Vic, give me a shout out for Old Time Psych. All right. Woohoo, Vic. Yay, you. Vic is awesome. All right. Did that do it? I hope so. Scratch. Natural gas is the way to feed data centers in the short term. Uranium will take the lead, but you will need to be really patient with uranium compared to natural gas. That is one factor for sure. We need a lot of power for these data centers, and that's only going to increase as we continue to, let's go big screen. As we continue to keep on improving AI. It keeps getting better and better. I mean, quite literally, I follow a lot of AI stuff, and the new models are coming out faster than I can keep up with them. It's crazy, but that's going to be a lot of power. Natural gas is a beneficiary. Energy as well, even the dirty energy will be beneficiaries as well. So it's one of the other reasons I think 2026 will be big for will be a big move on energy. It's going to be very interesting for sure. A Skid says people would be playing the arbitrage if Micron was doing that. All right, let's see. And demand on natural gas is up. Yep, it is. Cold weather is here for it. Minus 15. Yes, so that we mentioned the polar vortex. The West is getting hit the hardest. Well, apparently most of the West, not Vancouver, where it's sunny and like what, +5? Wahipple says ING in Canada going up because of the Kitimat shipping port coming online. They have been shipping out. They've been shipping out it for the last few months, but it's not fully commissioned yet. They are ramping it up slowly. Okay, fair enough. Skiz says US LNG is killing it right now. I think they'll have a deal with the EU to buy it, and that's even more expensive. Absolutely. MU versus NEO. MU year to date is 182 versus 175, so the fee is the difference. Okay, there we go. That's probably what it is. So it looks to me like they're taking more money over at the BMO. Which is a shame. But yeah, I mean, the fees on CDRs, I mean, they're not, they're there. They're not the best fees, for sure. Skiz, EU has an energy crisis and they can't buy from their closest neighbor, Russia, so they're forced to buy from the US. Plus, the US is selling our natural gas at a profit and export to the world, but the Liberals say no case to sell natural gas. Okay, let's see. My option is also not to do my own options trading. Yeah, I would agree. I would agree. Ha, income investor for sure. Larry says, I'm El Cheapo. I really hate things over 40 bucks. Fair enough. Fair enough. All right. I really like things 10 bucks or below. Skiz takes money to make money. Some of my best stocks are the most expensive, just saying. Yeah, that, I see both sides. I always see both sides. But yeah, that is true at the same time. Al says, come on, people, 86 watching and only 15. 15? I have a feeling, Al, it might be higher. It might be. I think you just have to refresh it. And I got my test one over here. Let me refresh the test one. My test one tells me that there's only 2 thumbs up. But I'm refreshing it. And 46. So there's actually 46 thumbs up. 46. Still, there's 92 people here and only 46 thumbs up. Guys, what do I got to say? Hit that thumb. Hit the thumb. Oh, so good. Rory, I'm going to put my options on call until I need them. That was bad. Yeah. I appreciate, you know what? I love dry humor. I love it. And that's one of the reasons I really love British humor. British humor, they are so dry, but it's fantastic. It's really fantastic. All right, TA. Jefferies and Barclays have issued downgrades on Royal Bank, TD, and BNS in advance of this week's Canadian bank earnings. Are there any reasons for concern? I was not concerned. Maybe now I am, but I was not concerned. Let's take a look. Let's just grab, let's grab TD. Let's look at TD. I always go to the Scotiabank, but let's grab TD here and take a look. All right, I'm going to pull this up here. Quite literally, we're just going to do the 6 month. What concern do I have? Just looking at their growth of their share price, this here and somewhere's in here, I don't know the exact spot, is going to be where we're going to find that 3-month period they're looking at. So obviously things are going pretty good and TD has been improving quite a bit. So I don't know what issues. I would have to actually read to find out why they're doing it, but it's obviously I still think they're going to do okay. Now, something like this where you get a downgrade, it could potentially work either way. I'll give you one example. If a company downgrades, let's say TD, they downgrade them before earnings call, and then earnings call comes and they completely blow it away, it completely invalidates what Jefferies and Barclays may have done. And it can actually cause a pump. It can certainly lead to a pump. But if they miss a little bit and you've got that downgrade at the same time, then they could react even more to the downside. But right now, I really think, like TD, I haven't looked at the other two, but TD, I honestly think they're going to do well. I think they're going to do well with their earnings. All right. A Prairie says, Candace, any predictions on where the railroads may be heading in 2026? That's a good question. Well, we could always follow their tracks and find out. But pun aside, I think they're going to do better. Like a lot of the negative stuff that have hurt CNR as well as CP, everything from strikes, everything from wildfires. Well, I'd love to say the wildfires is behind us, but it seems like it's becoming a reoccurring theme in the summer. But I do think that they will be a better environment for both of them in 2026, especially if we can get some kind of deal with the United States to at least either alleviate or at least stabilize the tariff situation. So does that mean 2026 is a big year of rebound? I think there's the potential for it. We'll have to be, I would still be cautious, but I do have cautious optimism for this one. Is extended care natural growth or speculation? It grew by 200% since 2023. No, it's definitely not speculation. So extended care, they've been doing a lot of things. Like they've been buying up other homes. So long care homes, they've been buying them, adding them. So they have been absolutely growing. So yeah, this is more growth. I don't know if I call it natural growth because it's some of it's acquisition style growth, but no, they've been doing really, really well, and their demand is on the rise, and it's going to remain that way as more and more of the boomers start to get into the need for long-term care. So yeah, absolutely. Hipple, no trailing stop loss on the National Bank trading platform. There isn't. I wish they would add it, but they haven't. Now, I've had a couple of times where I've got to do surveys for them, and I put that in every single extra comment. We need a trailing stop loss. Please add it. But so far, no. Scratch, is it just the price of the stock, or is the price to book? I'm buying one and under. Okay. Oh, this is to Larry. Okay, there we go. RR will be heading south with potash. There we go, with potash. Let's say it the right way. Thanks, that helps a lot. I'll try to use it. I've been selling too many stocks too low in price. Yeah, absolutely. And even, quite literally, guys, even when you go to buy a stock, if you're coming in and you're looking at the price, sometimes it doesn't hurt to throw in a limit order just a little bit lower. And, then go have lunch, see if you get lucky. A lot of times, you'd be surprised how many times, because of that price, especially if there's a bit of volatility on it, you'd be surprised. You'd be very surprised, I think. Never sell your losers. No, there's exceptions to that. There's definitely exceptions to that. But never sell your losers without a plan. Let's put it that way. Never sell your losers without a plan. Never sell your losers if you're emotional. So, if you have a plan, obviously you're not giving into fear, uncertainty, and doubt. But sometimes you're in a stock that it's going nowhere. And sometimes making a sideways movement can make a lot of sense. So yeah, sometimes you may take a loss, move it into an asset that is moving up, and recuperate a lot of that. But if it's natural volatility that is causing that price to go down and put you into the red, Most times you probably don't want to sell that. Once again, one other exception too is if you're tax loss harvesting outside of a registered account, and that makes sense. That can make sense as well. John, with 30% gain, but if I waited, I could had 100% gain. Oh yeah, that happens. And I'll tell you, I, sometimes when I put in my stop losses, they get triggered before I want. Sometimes that happens. I'm okay with it though, because I'm in profit when that happens. And it's like, okay, that's fine. It happened. Yeah, maybe I should have hung back a little bit more. Instead of coming in at 920, maybe I should have came in at 9 instead, so that way there was more room for that volatility to move. But at the same time, usually I'm still pretty happy with what the end result is. Yeah, sure, it could have been bigger, but it doesn't always. It doesn't always have to be bigger. Skids, REITs have been such a big disappointment. Last 5 years, real estate has done nothing but go up, except recently, and REITs have been flat for years. Yeah, REITs have been very disappointing. Yeah, I gotta say, I can't argue with that. I can't. Michael says many thoughts for many thoughts for your analysis of Timber Creek. I know that McCain and Atrium are doing better. Yeah, I mean, I want to see. I'd love to see Timber Creek soaring again, but right now, they've got a little bit of roughness ahead of them. They'll be fine in the long term, but nonetheless. John says REITs in Canada are something fishy. Too much money going to missing. Okay, fair enough. Let's see, Cowboy. Market has heroes and villains. Few years back, AQN was a hero. ATD, same story. Then they tried expanding too much. Now they are not popular. Maybe so, but you know what? You can have a hero that turns into a villain and then gets redemption. AQN is actually starting to look a lot better. I'd say maybe they're the anti-hero now. I don't know. Claudia says, this is what I am thinking for TFSA. QMAX, eBank, QQCL, HHIS, VFV, HDIV, HYLD. Thoughts? All right. First, wait a minute. Okay, no, TFSA. I thought you asked a question. Maybe it wasn't you, Claudia. I thought last show you were asking about the RESP at one point. But yeah, so this here, like I'm taking a look at what you have here. So you got QMAX, eBank. Oh, eBank has been doing really good. eBank's been outperforming Bank. Now, eBank is the European bank. And the interesting thing with eBank is eBank actually doesn't even have leverage. It's just covered calls and European banks. But keep in mind, the European banks have been doing really good. So that is that reason for that. So something just to keep in mind. QQCL, that's your technology play. I see that. Now, keep in mind, when you're looking at this, HHIS and QQCL, you are getting a lot of overlap there because they're both tech heavy. Well, QQCL is NASDAQ, covered call with leverage. HHIS is mostly NASDAQ. There's a few things like Eli Lilly that perhaps, that's not NASDAQ, of course. VFV, this is a nice solid S&P 500. It is not a dividend play. This is a growth play. So if you are a hybrid investor, this makes a lot of sense. HDIV, we already looked at that earlier. I do love that. The Canadian covered call one. And HYLD, another good US one. You're going to get a little bit of you're going to get a little bit of overcross in this portfolio, but at the same time, it's not bad. It's not bad. And I love some of the diversification I'm seeing, like eBank in there. That's pretty good. I like that. Brian, time to run, shovel, then get some groceries. Have a good evening, everyone. All right. Warm up. Warm up, please. All right. Oh, guys, we got a super sticker in here from Scratch for $2. A small donation to show my appreciation. Thank you. Well, thank you very much, Scratch. And that means you have joined Mary in the corral as a goat. Honorary goats of the channel. I love it. You guys are awesome. All right. All right, let's see here. Where was I? There we are. Brian says, or sorry, Rory says, later, Brian. Mayor says, isn't it weird that the only European financials covered call ETF is Canadian? Seriously, eBank is unique, and I don't know why. Um, if you guys watched the interview, so the interview I did with the CEO of Evolve, one of the questions I asked him was about basically finding holes. You know, what isn't being done yet? And I think eBank is a great example of that. I think Evolve, when they came up with eBank, they were looking and like, you know, it's like there really isn't any exposure. Like you do get some exposure through an all equity, of course. But outside of that, not a lot of exposure. And I think that was a really good one for sure. Um, all right, and Skiz is saying, Claudia, only the last three are tax efficient in a TFSA. Let's see. Well, eBank is great ETF, and eBank is just the EU equivalent. Now, and then, all right, and why? Why are they only? Here's the thing about tax efficiency in your TFSA. So I got a couple of things to say about that. One is if you are not even coming close to using up all of your space in your TFSA, I wouldn't even worry about whether it's tax efficient or not because it's no taxes. There's no taxes on any of it. To me, that's fine. However, once you get to that point where you have your TFSA full and you're kind of balancing between a non-registered and your TFSA, then this is where Skiz was mentioning tax efficiency becomes a big component because when you start looking at what ETFs you want producing income outside of it, you want to go with tax efficiency. You want to you want to minimize how much money the CRA is getting. So some things that are highly tax efficient, for example, return of capital. If you got a fund that has mostly return of capital and capital gains, that's very tax efficient. Those are great outside of your TFSA if, like I said, if you've got your TFSA full. So that's kind of where that comes in. But if you've got $100,000 TFSA space, or let's say 109,000. Let's say you have the 109,000 coming January, but you've only got about $50,000 in assets. It wouldn't even cross my mind about tax efficiency. All right, let's see. Well, bank is a great ETF, and eBank is just the EU equivalent. Yeah. Now, the big difference, too, though, is bank has the life cos in there as well. So you've got your big six, and you've also then got the three big insurance companies. I believe they also got Power Corp of Canada in there, so POW. That's the big difference. Now, their new one that's launching on Tuesday, SIXY, SIXY, that one is going to be kind of like bank, except for without those life cos. So it'll just be the big six. And well, at least on Tuesday, we should hopefully get a better idea what the distribution on that one is going to be. Also, I will point out 60 as well is going to be semi-monthly, so you'll get two dividends every month opposed to one. All right. Prairie says, I had expected better results of NWH, so Northwest Health, as it's not a residential REIT. However, it's been down since the failed deal with the UK. On the total return, I have almost broke even. Thoughts on Northwest Health? And this one used to. Let me pull this up. Let me pull this up here. I will tell you right now, this ETF, I used to love it. I used to love this ETF quite a bit. It used to do, and it used to be a nice little income ETF. But yeah, looking at it now, and that's the 1 year. Let's actually go back to the 5 year here. Because looking at the 1 year, you're like, well, wait a minute, Candace, what's wrong with that? It's higher highs. Yeah, the last year they have been slowly moving up. I love that. I hope that's going to be a trend that continues. But when we do look back, you can see they had quite the fall from 13 to 5. So yeah, and yeah, there's been some failed deals in there. It's a rough ride. I hope they can recover, but this is one of these ones where If you're looking for an entry point, I think this is a good entry point. I don't see them going much lower. But once again, I still think there's better options than REITs nowadays, unfortunately. And I love REITs. I love REITs. Yeah, down the track. Yeah, oh my God. How far behind am I? I remember saying that a long time ago. Let's see here. 512. Okay, all right, guys. I'm probably going to skip things that don't have QQQs. Well, not everything. I will skip a few things here and there, though. Until the I-US Canadian relations are repaired, the railroads will suffer. Yeah, right now we need to definitely either get some kind of reprieve for the tariffs, or at least stabilize them. If we stabilize them, then the railroads can adapt to whatever the new normal is, as well as importers, exporters, all of that fun stuff. Oh boy. Let's see. Many thanks for your thoughts on Timber Creek. I know that Atrium and McCann Mortgage are... I feel like I read that one already, Michael. Scratch says, we're on the edge of a major capital rotation into commodities. Got to be patient with the railroad stock because they will do great. And here's another thought too, guys. So as we expand more and more into minerals, a lot of our mines are up north, and a lot of them are serviced by, guess who? CNR. CNR is one of the major backbones for our, for the minerals, for our mineral sector. So that will work in their favor. So when we start looking forward, now keep in mind, even with some of these fast tracking things the government has announced, it's still going to take years before we see anything. So that could be good news for CNR maybe in 2027. Who knows? We'll see. We'll pay attention for sure. Trains are going to run until the world blows up. Absolutely. Trains are hands down the cheapest, most economical way of transporting goods across the country. Nothing beats them. I don't know. I don't have the data in front of me, but I think I did a deep dive on CNR a few years ago, and it blew me away how much more it was to truck compared to train. So train is absolutely going nowhere. Well, it's going from point A to point B, but yeah, we're never going to get rid of trains. All right. Let's see. United Pacific has thousands of carloads of coal a day in the U.S. And yeah, here we go. Cowboy once again. Trains are the most cost-effective way to move heavy haul and intermodal. That's exactly what I'm saying. That's exactly what I was just saying. Let's see. All the Class 1 railroads also have track agreements across North America. It's all connected. Oh, it is. Absolutely. I mean, you take, people always like to talk about CP and how they have tracks, contiguous tracks from, from Canada all the way down into Mexico. CNR is not that far off. They can go from the Canadian North all the way down to the Gulf of whatever we're calling it today, Mexico, America, whatever. They have all of that. Roku says, I find setting a limit price on Wealthsimple sometimes hits the price, but my buy doesn't go through and I miss it. I've seen similar comments on Reddit. Yeah, I've heard a few people talking about that. I think Wealthsimple needs to, instead of a limit, they need a real stop loss on there. If you ever get a survey from Wealthsimple, tell them they need a stop loss. They do, absolutely. Lisa says SIA hit all-time high recently. Yeah, and SIA is another one in the same kind of boat as Extendicare. So yeah, I love them both. Rumors has BNSF looking at CNR partner buyout. Oh, that's interesting. We'll have to pay attention to that. But keep in mind, rumors are rumors, and you kind of have to take them with a grain of salt. But it's not bad to have them in the back of your mind because, sometimes a rumor does pan out for sure. All right, and Larry's talking to Scratch, so we'll skip that. Lord Fubar saying 55 thumbs up. Nice. Well, there's 92 people here. Let's push that to 70. So if you're one of the 45, I'm talking to you. Hit that button, please. Absolutely. All right, Rory. That would be crazy if BNSF and CN merged. Yeah, yeah, that would be. That's that's the type of merger that I would be really worried that even if they wanted to, um, regulators may not let something like that happen. But we'll see. Like when CN tried to, like CN was the first railroad to almost get Kansas City Southern, but the regulator stopped it, and that opened the door for CP. Just putting that out there. Larry says, I'm now doing things like that instead of buying, say, Berkshire for 500. I love Berkshire. Berkshire's great. Absolutely. That would put Union Pacific in second spot. It would. It would. Warren Buffett owns BNFS Gates, big in CNR. Yeah, well, maybe he knows. More goat stuff. All right, let's see. The profit opportunity in a stock under 10 with, say, 100K in cash is better than a $80 or $100 stock usually, at least in things I invest in. Awesome. Claudia, yes, trying to get the hybrid strategy as you recommended in the last live. I have 3 to 5 years to build up my TFSA. Thanks. Oh, you're welcome. You're welcome. And your TFSA is empty? Yeah. So in that case, don't worry about tax efficiency. Yep, Candace is right. Okay, I like that. Can I pin this comment? No, I'm joking, guys. I'm joking. Larry says, keep in mind the way I do things is not how you should. I have people to answer to. It's just like I think Buffett's advice isn't the best for regular people. However, Munger's, I would say, is perfect. Yeah, I mean, between the two of them, Charlie Munger had a lot of good advice. OBE is that kind of stock that no one is looking at. Tons of share buybacks with a low share count. Yes, OBE. And I will tell you, there is a couple of shares of that sitting in the 0 to 100K challenge because Scratch maybe buy it, but I'm okay with that. I'm okay with that. Larry, oh sorry, Larry's talking to somebody. When I'm behind, guys, I skip over those ones. Scratch says gold is a leader, oil to follow 18 to 24 months after. And Lord Fubar, I always say it kind of like a snooty, we're announcing Lord Fubar coming down the hall. Let's see, I have BTB.UN for about 10 years on a drip. I love the cities they are in and the dividend. Yeah, I mean, BTB is another pretty good REIT. I do like them as well. Wahipple says the ports in Prince Rupert have been setting records again this year. Nice. Silver is in between. Look out for silver in the next week's month. I would agree. Silver's had some pretty good days. Like even last week, I know we looked at silver a couple of times. Heck, let's look at silver right now. We'll at least see what the last date was. Oh, you can see I've already moved the blue line, Sky, so it's already ready for December. Silver. Yeah, look at this. Up 5.61%. Now, I think this is Friday. It says real-time market closed, but this was where it ended on Friday, up 5.61%. So that's not too shabby. That's not too shabby at all. All right, suggestions for Evolve. 0 day to expiry on gold and silver. Seriously, nobody does that. General commodities, covered call on DBA. Liquidity is there, but no such thing. That's pretty interesting. Evolve is one of those companies that if they did it, it wouldn't surprise me. That's for sure. What do you think of Propel Holdings? Would you add it this time? I do like Propel. I like Propel. Let's take a look. I haven't looked at them in a little bit, but all right. Oops. I guess I probably should click on the right thing instead of. All right. Is it PRL? Is that what it is? PRL here, Propel. There we go. Good old Propel Holdings. And I'm going to pull up the 1 year. So Propel, they've been up and down. They've certainly had some volatility in the last year. Let's pull up the 3 years. So when you see the 3 year though, one of the things that you can see is that, yeah, this doesn't look as out of place for them. And it almost looks like they might be going back up again. That's a possibility. Now, The nice thing is if you're waiting for that to happen, if you get in at this level, and I think this is not a bad level because I see a lot of support for them around 23 to 25 in that area. If you get into them, you still get a nice little dividend, so 3.345%. So you're getting a little bit of cash, and I think it's very possible for them to go back up to 31, especially if 2026 does turn out to be a strong year for energy. Then I think it's almost a certainty that they'll get back up into that 31 range, and they might even go higher. So I do like Propel Holdings, though. All right, Skiz says, I've noticed with U.S. about to take Venezuela, I see flashbacks of Iraq and the WMDs, and Halliburton came in and made money. This time, Chevron, who is in Venezuela already, or ExxonMobil in Guyana, will be it. That's a possibility, yeah. Yeah, that whole Venezuela thing, it's just like, come on, back off, guys. But yeah, there's definitely some interesting things going on there. All right, let's see. Progressive investing. I'm in a dilemma, earning 15K a month in registered funds and wondering if I should turn it all to RIFs and start taking an income and catch up on my and my wife's TFSAs. What do you think? Okay, so a couple of things here. For one, let's just sort of talk a little bit here. From the sounds of it, it sounds like your TFSAs are pretty much empty, that you've been putting most of it into an RRSP that's now looks like you're on that verge of turning it into a registered retirement income fund, so a RIF, an RRIF. Okay. The nice thing is everything that you do put into the TFSA, you can then turn that into income. So you can pull some income out of that TFSA. That's great. That's a good thing. That's kind of that thing to go. Now, the disadvantages right now is if you have a lot in your RRIF, one of the disadvantages is that if now, from the sounds of it, both of you are alive. Great. I love that. But if you have a lot of money that's in there when, if you pass, for example, it's fine because it's just going to go to your wife, and that, that's not really a big taxable issue. But if both of you were to pass and still have a lot of money in that RIF, it will get taxed at your marginal rate to your kids or whoever it is that you're leaving that money to. So that's kind of one of the concerns about having a lot of money in there. The TFSA actually has a better tax situation, a scenario if you're leaving it to your kids. So with that being said, here's kind of the way I would do it. You have to decide how you're going to do it, but this is how I would do it. I would take a look, first of all, at my tax situation. I take a look at the income that I have. And you said right now you're earning about 15K a month in your registered funds. All right, now I don't know if that means, so keep in mind, any that you do have in your TFSA right now is tax-free, so don't even count that as income at all. But I would look at the income situation. I'd be like, how much can I take out of the RRIF without creating any kind of tax complications? And what I mean by that is if you're on OAS, you obviously don't want to take out enough that it pushes you into a clawback. Or if you're lower income and you've got the GIS, you also don't want to pull out enough that it would impact that. So it's kind of a balancing scenario. And that's kind of what I would do. I would look at what's the maximum I can take out without there being any real tax implications on me. And then I would move that into the TFSA. So if math, of course, is not your strong point, there's definitely professionals that I would talk to, like a tax professional maybe, or an accountant, to see if they could run the numbers for you to make sure that that you're not, because if you're not good with math and you try to do it yourself, you don't want to get into a situation where a missed decimal pushes you into a worse tax situation. But that's kind of the balancing act that I would look at. All right. Larry says, see, this time it's a message to me, so I can't skip it. I'm very much still debating long-term plays versus short-term opportunity ones. I'm not sure which one is better or allocation percentage. Been thinking about this for 2 years. And that's the thing, right? To me, I think it boils down to need. So for most people, now in Larry's situation, Larry is running a fund. So obviously, the people who invest into his fund, they're looking for returns. So you're probably going to have to balance both. That's what I think. I think you're going to have to take advantage of the short-term opportunities to pump cash and to keep the investors happy, while at the same time leveraging a little bit of that into some more long-term plays, because that's where you can make a lot of really big money down the road. So I would look at probably both. Yeah, absolutely. All right, let's see here. As someone from neither country, I would suggest Canada and Europe to gang up with free trade zone and triple and ride Trump out. Won't be long now. Yeah, possibly. And that's, I think, part of what Canada is trying to do is open up as many more trade partnerships with the rest of the world, All right. A skid says earning 15K a month. Brah, you ain't got any dilemmas. There we go. Well, 15K a month is not bad, that's for sure. Scratch, what a great time to be a contrarian. Claude, for some stocks, I find it tough to know if it should be long-term or not. LUG, I love that stock, but when should I sell? I don't think gold can go up forever. Yeah, here's the thing. So, and this is the thing. I mean, I'm bullish in gold. I think gold is going to continue to go up, but it's not going to go up at the pace that we've already seen. Like, I think it's still going to be a steady movement to the upside, but I think the big 100% type, some of the 100% moves, like, I think, yeah, you're not going to see those. I think things will slow down, but, and here's the thing, I don't think gold is going to turn around anytime soon. I think it's still a safe bet. And even if you're looking at it long term, even if it were to retrace, even if we got a correction in gold, it will get back up again. So gold is still a pretty safe hedge against almost everything. So I like it, but yeah, when you're looking at London golds, I've had incredible returns with them. But, are they going to continue to go up like crazy? No, but I think there will be a steady movement, probably for at least 2026. I can't even gauge past that. Claudia, Candace, do you do private consultations? I do. Just reach out to me. You can reach out to me on Discord or on Facebook, or actually on email. There's an email address there on my YouTube. You can reach to me through there, and we can talk about it. All right. Larry says, I don't know if the publicly traded gas and oil companies will make money off of Venezuela. I think, like in Syria, one of Trump's friends' private companies will take over. Interesting. Yeah. Thanks. Great answer. All right. Scratch, can we build up a position for a Tuesday show? And first of all, before I even answer that, let me drop in a goat once again, because that's a goat move once again. So can we build up? We'll do that on Monday. So Tuesday, yeah, we're going to do that tomorrow. But here, let me just say this, Scratch. If we get close tomorrow, I'll remember what you did today, and maybe I can push that onto it. I'm not guaranteeing it, but you guys know I'm a wimp when it comes to stuff like that. So I definitely appreciate it, though, for sure. All right, Rory, the Human Fund, money for people. Candace, do you think technical analysis on price movements and trends has any merit? I do, to a certain extent. I think basic technical analysis has some merit. Some of the more crazy stuff, I look at it and I'm like, seriously, why are you overcomplicating things? So, for example, you get things like the head and shoulders pattern, the teacup pattern. I'm a little more skeptical on some of the more advanced patterns, but if you're charting some basics, like basic Support and resistance, yes. If you're looking at psychological levels, yes, there is some merit there. Is it perfect? No, no, it's not. There are many things that can certainly derail a good, you could put all your patterns in, and a black swan event doesn't care about any of that. It's going to plow through it. And sometimes just even non-black swan events can alter things, can change probabilities. So they give you probabilities, but as I said, if you have a probability, so if your probability is, let's say, 66% of the time this pattern goes to the upside, well, there is also that 33% of the time that it doesn't, or 34%, I guess. You got to keep that in mind. It's, it is what it is. And one of the things too, and I'm just noticing down here, just jump down for a second. Skiz says technical trading is based on what the bots will do now. That will change things. That will make technical analysis harder, because guess what? The bots don't trade on emotion. They trade on algorithms. So that is something to keep in mind. Thanos says, what are your thoughts on TELUS stock value play or value drop? It went to 1283. I am expecting a better year for the telecoms in 2026. And, well, TELUS is a telecom, so I think they will see a better year. I think there's still a little bit of struggle, though, before they really pick things up. And I know a lot of people are concerned about their dividend. I'm concerned about their dividend, but I think they're probably not going to cut it, even though a cut could be a good thing for them. But I think they'll be fine. I think they'll be fine. They may not be the best play. Actually, of the three telecoms, and I hate Rogers with a passion, but they probably have the best. I think they will probably have the better recovery. Now, with that being said, one of the other things with Bell and TELUS is they are sort of side hustling into AI data centers. If that really works out, that could really help them quite a bit. I still think Rogers has the edge, but either of them through their AI data centers could become interesting. All right, Mayor, want crazy returns on gold by GXDU or GDMN? Yeah, sometimes there are definitely opportunities out there. I do like both of those. Does anyone have any favorite silver stocks or ETFs? It's actually interesting. So the potential videos that the community submitted to the channel members for consideration, one of them was actually on commodity ETFs. It didn't win. Part of me wished it did because I liked it, but at the same time, the one that won is one I wanted to do anyways. It's some pretty good evergreen content. I think you'll be very happy with that one, Jan, because I think it was the one you suggested. So yeah, it's there are some out there. I'm probably going to do a video soon on these. I think early 2026. And we'll see what I can come up with. I don't have any that stick into my head right away, at least. At least any that really pop out. A lot of the exposure that I've been getting to, like gold, silver, things like that, have been through individual stocks, individual miners. But there are definitely some good ones out there for sure. There's an SL1, SLJ. Why? That's a possibility, but yeah, there are definitely a few out there. Let's see. Are you in USD in your TELUS price? All right. Skiz says technical trading is based on what yeah, we already read that. Okay. The mid-tier silver already moved on. You can still enter, but if you want speculative with less money because more risk, ELO, CKG. Okay, there's a couple. Bear Creek with more risk than the above. SLJAV, SLVO, there's a couple more. Let's see, 60% of the time it works every time. There we go, from Anchorman. Thank you, I'd like to look at a few. Still early, can you play AG and EDR, but you didn't catch the double bottom? Yeah. That is true. Let's see. Skiz, I prefer to hold gold, silver, but I had eyed First Majestic at one point. Cowboy, I try to have a couple of grand in reserve for Trump melting off and dropping the market. Yeah, that's not a bad strategy. Imagine if you had a few thousand sitting around waiting for Liberation Day. Let's see. Did you give your predictions for December's market? I did. I gave one prediction. I'll do it again. I'll do it again. So what I'm thinking in December. So the first part of the year, we got a little bit of tax loss harvesting. So I think we'll see a little bit of volatility, a little bit in the red the first half of the month. Sorry, not year, half of the month. But I am predicting a Santa Claus rally this year. So I think December will end in the green, a little bit up, a little bit up. I don't see it being as big as it was this month, but then again, guys, this market's been defying everybody. This market has been doing whatever it wants, and I love it. I love it. Like, I don't mind. I don't mind being wrong. I really don't, because it makes life more interesting, that's for sure. KSLV, there we go. TELUS's free cash flow covers approximately 90% of its dividend. Yeah, absolutely. They are a strong telecom, and it won't take much for them to turn things around. I would agree, and that's the thing. I don't think the dividend's an issue. I know people focus on it, and I know that there were some articles about it, but I'm not super worried about it. Loud month money, Trump's guide to wealth. Kind of, kind of. All right. Let's see. That sounds nice. I would take that to the bank. All right. Fair enough. Global X has a new silver ETF. Nice. Oh, welcome to the show, Mario. I think this might have been your first comment. Yeah, and there's also the new copper. So there's a new copper ETF as well coming out that I'm pretty excited about. So that's kind of the thing. I've been kind of waiting to see what all is all gonna shake up. It's all gonna shake up. So yeah, and here we go, AGCC. So there's going to be a lot, I think there's going to be a lot of interesting ETFs coming out sooner. Like this trend that we've seen in 2025 with a lot of ETFs releasing, a lot of new covered call ETFs, this is going to continue. It's going to continue into 2026. And that one question I hear a lot is that, is there too many ETFs now? What can we do? Well, the reality is, right now, ETFs are booming. Like, quite literally, more and more Canadians are switching from stocks to ETFs. And there's many reasons for this. One of them is, of course, that diversification they get into ETFs makes it feel like a safer play for a lot of people. So it is starting to happen. It is definitely starting to happen. We're going to see how that all rolls out. I'm looking forward to 2026 quite a bit, actually. Let's see, Larry. It's always a free gift. Yeah, exactly. I can't wait for that one either. Jan says, I'm starting to lean heavier into cash reserves for large dips since we get them often enough these days, rather than DCA all of my dividends like I have like I have a hole in my pocket. It's not a bad strategy. It's funny. I would never have said this would be I would never have called this a good strategy with every other president, but with this president, not a bad strategy. Not a bad strategy at all. I'm the best guide. Nobody does guides better than me. All right. Look at DLO market cap that has upside 1560 to 17 with record reserves and earnings in the last 2 quarters. That highest upgrade to 19. Interesting. DLO. I haven't actually looked. I'm pretty sure. Actually, I think we looked at it. We looked at it recently. I know we did. DLocal. Here we go. But yeah. I mean, this is not. This is not that bad. It's not that bad. I do. It's another one. You really like these U.S. stocks, Michael. I gotta say. But yeah, not too shabby. And here, let me just pull up some key data here in the background. Yeah, it's not giving me much. Sometimes with these US stocks, it doesn't give me a lot. I have to go to Yahoo, and let's try it over here, because there was a couple things I wanted to see. DLO, here we are. Let's pull it up. Why is Yahoo in dark mode? I don't know. I don't know. Yeah, here's what I wanted to see. I wanted to see their debt to equity ratio. So it's not bad. It's 13.23%. They've also got a return on equity, 35.56. So you know I'm a fan of ROE. I love it when it's above 20%. I do like the back end on this one, Michael. I think it's looking good for sure. All right, and says December. If the Fed's cut rate 25 or 50 basis points will drive up U.S. stocks, I am moving funds to U.S. stock QDVO, DIVO, SPYI, and JEPQ. Ah, interesting move. Yeah, it'll be very interesting to see. I think we will see. I think we will see a rate cut in the U.S. 50 or 25 or 50. That I'm not 100% sure on. I'm not 100% sure which one we're going to see. All right, let's see. Don't sleep on platinum, palladium, and lithium. Unfortunately, no income funds on these. On these, help evolve. There we go. Yeah, I like platinum. I like palladium. I'm not super keen on lithium yet, but maybe that can change. Let's see here. GOF's a fund that pays a 0.18 monthly that I bought. All right. Oh boy, we got another super. We got another super in here. Let's grab our last goat. This is our last goat. After this, we got to resort to other things. We got to resort to other things. What can I say? But thank you very much, Scratch. December predictions. Santa will increase his market cap for all of you. Let's have a show on Tuesday. Oh, you're really pushing on that Tuesday, aren't you? Yeah, you know what? Let's see. Yeah, we've got the 4 supers. We already got a Monday show. Oh boy. You guys know I'm a wimp. You guys know I'm a wimp. All right. All right. You guys did it today. We'll have the Tuesday. All right. There we go. Scratch. I can't believe it. I gave in. I gave in. Skits. I've noticed you basically could throw a bunch at any new ETF and people are so excited to invest. You could pull out after 3 months and make a killing. Yeah, that's a possibility. It's a possibility. I don't, the companies though, the companies that I'm looking at, all of the big ones, I think you're safe. I think you're safe. Evolve isn't going to rug pull you, or Harvest, or 9 Point, or Hamilton. I think you're safe for sure. But if somebody comes up called Acme ETFs, be careful. Be careful. They haven't made anything good since those anvils. That's all I'm saying. Candace will need a nap next month. Oh no, this is going the whole month, Rory. So I'll need a nap. I'll need a nap in January. Mayor, if you like, take a look at what LITP did this year. Let's see. Well, let's take a look. All right. Boop-a-doop-boop. All right. So that's an I, right? LITP. I have not looked at LITP before. Oh, Sprott Lithium. Okay. All right. And let's take a look. Oh, you see? I said change my mind. You're moving me in the right direction. I do like the looks of that. So yeah, and lithium is one of those key elements when it comes to, well, batteries. A lot of batteries use lithium, but there are new technologies on the horizon. So I think lithium's days are numbered, but perhaps not yet. Perhaps not yet. SILJ, I have a feeling this is going to be another lithium, isn't it? SILJ. No, it's silver. There we go. Junior Silver Miners ETF. Here we go. There's a good US one. And let's come down here. No dividend. Perfect. So this is a good one that you could hold it for growth. And let's just go back a year. And you can see this is a ETF that went from 11.95 to 26 in the last year. That's not too bad. That's not too bad. Got to turn on my lamp. Getting darker outside. Do we have any beaver animations? Well, if we get to another super, then you'll see a beaver animation. So yes, you're right. That's the backup. That's the backup. maybe maybe I need an animation of a beaver wearing a goat costume, but that sounds really creepy. So maybe not, but we'll keep that in mind. Guys, we're at about 2 hours. If you got your last minute questions, get them on in. Doesn't mean we're leaving right away. Just means I want those questions. If you guys keep the questions coming, I'll keep the answers coming. Let's see. If silver keeps it up, it will lose more and more industrial applications too expensive. It is. It is expensive, but it's also used in so many things. So we'll have to see. I mean, keep in mind too, for me right now, between silver and copper, I kind of would choose copper personally. Now, this is just me, only because copper is it's used in pretty much everything, and there is a shortage coming. So I would, and I love silver, so it's hard for me to say I would choose copper over silver, but I might. Funky chicken dances would be funny. Funky chicken dance. Well, we'll have to see. I think I can do a lot more on OBS as I learn more and more how to use it than what we can do over here on StreamYard. So I am looking forward. I'm definitely looking forward to it. All right. Thanks for the info, says John. You're very welcome. You're very, very welcome. It's what I do. It's definitely what I do. All right. Whew. Guys, if you've not been here since the beginning, I'm going to share a link here one more time. This here is the Learn link, because we do have a thing coming up next week. Actually, 9 Point. 9 Point is doing this thing next week. I'm kind of excited about it. I want to check it out. And this is what it is. It's basically Unlock 2026 Income Strategies. So it's stuff that do-it-yourself. It's up the do-it-yourself investor avenue. I think it's going to be pretty good. It's about an hour long next Saturday. So they're going to cover, they got three main themes. So we're looking at key macro themes shaping 2026. I like that already. And that's we've already been hitting on that here today. How covered calls really work and some of the common myths. If you're new to covered calls, that topic will be awesome. And I love the last topic, how to evaluate risk and leverage. And now, as we're seeing more and more covered calls coming in with leverage, and a lot of people talking margin, a lot of people like Wealthsimple offering margin and things like that. This is a great topic. So this is fantastic. Guys, the link I gave, it's free. It doesn't cost a thing. Just register. I would say, you know what? Register, and if you don't go, you don't go. But at least register so that way you have the opportunity to go if you've got the time on Saturday. I'm going to check it out. I'm kind of looking forward to it. We'll talk a bit, like next week, we'll talk a bit about some of the stuff that came out of here, but I'm pretty happy. I'm pretty stoked about it. I think it's going to be a lot of fun. I think it's going to be a lot of fun, or at least a lot of good information. Let's see. There's actually a income fund on these metals, diversified but pays once a year. TMET. Oh, I hate even the semi-annual. So for example, I think right now the only semi-annual I have is Hammond. That annoys me. It's like, I don't mind quarterly, but semi-annual. It's like, I never know when it's coming. But we'll see. Anne says, Candace, you are very helpful for my ETF picking, but you should point to those low volumes. Hard to get, hard to sell, not much liquidity. I would not go below 100K average volume. Thanks. And this is a good point. If you are planning to buy something and you're not planning to, if you're planning to look at short-term investing, volumes become huge. So yeah, like for example, when I'm doing swing trading, volumes is really, really important. I don't want something where if I need to sell it at a profit and there's no one to buy it, I don't want to run into that scenario. Now, depending on what you're doing, though, if you have a half-decent ETF, and you got to take a few things into consideration. So let's use eBank as an example. eBank has a great income amount, so you got really good income on it. You're making, and it's actually doing better than bank. But if you look at the volume, and let's do it. Let's go look at the volume for eBank. I actually have to find that. Here it is. All right, so we'll go to eBank. There we go. eBank.to. There we go. So here we go. This is the unhedged one. I just grabbed this one. That's fine. We'll grab it for now. But when you look at the average volume, 10,665. So you might look at it and be a little bit worried, but this is where you have to sort of keep in mind, okay, well, what is it investing in? European banks. How many people think about, like, it's not something that a lot of people, it's more of a niche. It's more of a niche. So with that in mind, yeah, it's going to have a lower volume. And if the lower volume makes sense because it's a niche, another example is there's an ETF for Australian banks. It also has a low volume. So that is something to always keep in mind. And there's nothing wrong. Like if you look at something and you're like, well, I just want to have a higher volume covered call ETF, for example. There are ones like if you look at HYLD, that's going to have a pretty good volume on it. So HYLD, when we look at its average volume, 165,711. So something to keep in mind. Another factor is if it's a brand new ETF. So when 60 comes out, you can come over here and look at the average volume. And one, it may not even have it for a bit. But once it has it, it will be lower as it develops, as it gets more and more popular. Those volumes will go up. But you always want to look at that I look at a volume and look at a context-wise. Now, if it's a fund that's been around for a long time and it has a really low volume, then I might be questioning, like, what's going on, especially if I don't have a reason for that low volume. Sort of like with the eBank. eBank, I have a reason why that volume is low, and it makes sense, and I'm okay with that. But if it was, let's say it was HYLD, and I went in there and the volume was 10,000, I would be like, what's going on? And, that can make sense, absolutely. All right. Scratch says silver futures. Cowboy, margin, isn't that buying on credit? Pretty much, yeah. I mean, basically, you're taking a loan from your broker. Your broker is lending you money. You're being charged interest on it, and there's terms on it. So there's if you're using, because normally you're using whatever stock you're buying. A lot of times you're using that stock as collateral, and if that price drops, then you might get into a situation where it no longer covers. The collateral no longer covers the loan, in that case, the bank or the broker is they're gonna margin call you. So you'll have to basically either put more money in to, make it up, or or they'll start, or they can take your assets. So margin is risky. I don't like it. I won't use it. But sometimes you have to borrow money to make money. All right, Lord Fubar. And let's see, is there foreign withholding tax on eBank? If so, do you know how much it is? I don't know exactly what that would look like. However, whatever kind of tax that might be involved is going to come. It's going to happen before Evolve pushes it out. Now, mind you, that would only be tax on the actual dividends from the European banks that are in there. Most of the money, most of that yield is coming from covered calls. So those are all done on the Canadian side. That has nothing to do with it. So none of that money would have any kind of withholding tax on it. But yeah, if the Bank of Germany, or the douche bank, I guess they call it, if they had a dividend of 5%, then there might be I would have to know what the tax treaty is between Germany and Canada is, but there could be something, and also at the same time there could even be a deal between Evolve and that tax system. It's hard to say, but that would happen on the back end. So basically, whatever returns they're getting, all of that, any withholding tax that came out of the dividends that they're getting would already be taken care of. And obviously, there's none of it on all of the money they're making from premiums. That's the big area. All right. Girl Saint says, will 60 be visible on Wealthsimple as soon as it is released on Tuesday? Um, the easy answer is maybe, and I'll tell you why. I have seen new ETFs release and Wealthsimple can't see it right away. So there is that possibility. However, I suspect this will be one that we will see fairly quickly because I know there's a lot of excitement about it. So I think you're going to be fine, but keep in mind you may have to wait. You may have to wait if that's the situation. And honestly, I want to get in on 60, but I probably am going to wait for it to go up and come back down a little bit. That's probably what I'm going to do. Now, that did not work for me on HHIC, but on 60, I'll try it again because normally that is a good strategy. Margin, hell no. Absolutely. Exactly. Let's see. Home buyers score record discounts as sellers slash prices nationwide. And I have margin accounts, but don't use margin, just my own cash. Yeah, that using your own cash is the safest bet. Now, mind you, there are, if you're really rich, it's not that you would use margin, but a lot of really rich people, the way they stay rich is instead of taking salaries. So take Elon Musk. So Elon Musk, his actual salary from Tesla is typically really low. And what he does is instead of cash, like a cash salary, he takes shares. Because then what he can do is he can borrow against those shares. And that creates all of this tax-free income. Because you don't pay taxes on money you receive from a loan. And plus, you can then write off the interest. So there's a lot of interesting things that the uber rich do to prevent them from paying taxes. Is it fair? Heck no. It's not fair at all. But at the same time, if you ever get in that position, you'll probably do it. Everybody does, I guess. Cash advance credit card before margin. All right, got it. Thank you all for thoughts today. Another fantastic live stream. 100x margin into scam coin. Yeah, yeah, that's the way to. Don't listen. Larry, have you turned evil? Mayor, margin cost is tax deductible, I believe. Think rich. Maybe it is. I don't know. I don't know the tax laws around margin per se. So yeah, that could be. But I do know that they do that with just straight up loans as well. So it's one of those ways. It's one of the reasons that you get when you look at some of the paintings, like art, a lot of art is worth a lot of money. It's not because it's rare, it's because the rich use it as collateral. So they will drive prices up the best that they can because, it works out well for them. So what can I say? All right, guys, we're going to be back here tomorrow and Tuesday and Wednesday. But now today I made that exception. I let our good buddy Scratch pay for Tuesday today, but nobody could buy Thursday till Wednesday. So we got to keep the train. I want to keep the train on track, but we can't just have every day bought up front. We need to have some fun as we move along. So we will be back tomorrow. We'll have a market close and then another market close and another market close. Oh, this is going to be fun. This will be fun. All right. Until then, everybody, thank you for coming. This has been another awesome stream. You guys are a great audience. I will see you tomorrow. Until then, bye-bye.